Happy Saturday, and thank you for clicking on my video. Going forward, I think there's really just two options here. Are we going to experience a big crash coming right now? And we're going to look at volatility towards the end of this video to show you that. And we're going to keep these options in mind as we do look at the stock market today at the bigger time frames, doing that technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward, looking at AMC and GME. And we may touch on Crowdstrike for a moment. But really, the only options that I see from here with the signals that I'm seeing according to volatility are option one. We're maybe going to experience some kind of big crash that's starting right now, and we'll see if that is going to be in the form of possibly a bear market. But something that'll help us out is option two. Do we see a rigged market buys more time, right? That means we end up actually going to higher levels. So in one scenario, it's kind of like, do we get a crash right now in the form of a bear market or just some kind of big crash with the volatility signals? Or do we see another rigged move higher? And the signals will tell us which options are happening based on what we go over today. So we're going to look at some stuff today, looking at the weekly timeframes, and this is where I really wanted to take a step back and just first of all talk about Crowdstrike. Okay, I wanted to talk about Crowdstrike because it is confirming a massive signal here. Obviously, we can look at structure and see that we could be getting some kind of bounce soon and get that head and shoulders, right? We can see that almost right away. But the main thing I want you to pay attention to is look how steep this divergence is right here. And you do have that on the MACD and RSI at the same time. This is an overall reversal signal, and you got that to confirm you're closing below some key moving averages, going into a little form of support down there. So the reason that this is really rough is because now when you look at the monthly chart, you can start to roll this over. And if I just zoom out, I know this hasn't been around long, but if I just zoom out on things for a moment, we can see how the MACD was up in these areas and now it's down to here. So this technically would be divergence across the way between these highs. So you actually have divergence at the same time. So if you get this monthly to turn over, we might be seeing one of the biggest crashes in history, and Crowdstrike might be the first stock that's kind of showing us that weakness. Now, there's a lot of political things behind this. The data they're in charge of and all kinds of things like that could actually be data that is related to some of our politicians. And so it's kind of interesting that they randomly have some problems at a very unique time, right, during an election cycle. So very interesting with that. I believe this company does have some ties to Ukraine in some way. I need to do more research on it. But overall, just paying attention to the signals, you would say this is not good. Now, we're going to keep this in mind because as we go over to the SPY, we see a little signal that's kind of like that. We see this little divergence up here, slightly down on the RSI, slightly down on the MACD here. So what we want to see from this is this can produce serious weakness. This can, if it confirms, right, if we actually confirm this down, this can produce the monthly to see some big weakness, and that could, with some kind of topping tail up here, turn this MACD down over the next few months. And if that does happen, that would be a signal that we haven't seen in a long time, and that could mean that we're seeing a big crash coming, right? So we want to pay attention to that, because if this crosses down, you have the potential to go down and test something like 329.55, but by the end of the year, you're most likely going to hit 406.91 if this were to start confirming. So I would really pay attention to that. That means that we could end up like 150 from where we're at now, something around 138 points lower by the end of the year. So I'd really pay attention to these signals that you're seeing lately because we're seeing some crazy stuff. Now we're going to talk about the other option. Option two, rigged market buys back up, right? It buys more time. Well, what this would mean is overall we see the weekly chart. Okay, you see this weekly chart here, and we're going to go over this in the shorter time frames as well going into next week. There are some crazy things that can happen next week where we could dip down to lower levels but end up buying back up, and then maybe that point's actually over here. But if we are going to see an overall weekly, say, pullback, maybe a correction on the weekly, a little bit more dramatic than this maybe even, we could actually see this weekly dip down to lower levels and then scoot back up for another turn up. This would be the next rigged move higher that would then maybe lead you towards some kind of pullback down towards maybe a level of 520 or something like that. We just go to there over the next few weeks. We see this thing draw down for a month or so, and then we actually curl back up into positive territory, which would give you another positive move. And maybe we double top, maybe we go a little bit higher. So this would be the scenario how we would most likely see option 2 play out of some kind of rigged market move. Now there is possibility more so that I'm leaning towards some kind of bear market when we do experience some kind of crash. I'm not saying that crash has to happen right now, but I'm open to the probability that it can happen right now. We're going to show you the VIX towards the end of this video, so make sure you stick around, make sure you like and subscribe so more people can see this. But we've already seen CrowdStrike confirm this. Now we're just waiting on the SPY. And if this is going to be a bear market, which I think it really is, because the reason I believe that we're going to see some kind of bear market, at least initially, is because it actually causes retail to lose the most amount of money. So if you didn't know this, for the most part, a flash crash can really hurt the people who are holding stocks for a long time, right? We can see some kind of flash down, and that can really hurt people who are trying to hold stocks in these levels. The only thing with that is, hey, it doesn't really hurt the options market. Do you know what hurts retail in the options market? Well, when you dip down dramatically and then retail gets all their puts at the wrong time and then you go back up. So this moment right here, when we caught this rigged move and when we caught this rigged move, these were two key times back in October 2023 where we said this thing is basing out and it's going to short squeeze, and it's short squeezed. These are the type of things that bait retail into thinking, hey, this is going to crash further down, and then it ends up going back up, which really hurts the retail on the options side of things as well. So we saw that moment here where right here, all the selling started piling on, all the puts started to come in from the retail side, and boom, we caught that rigged move higher. Then we see another dip down where people are convinced. And so someone was asking me, how does retail, like, why does retail sell all at once? It's not that they sell all at once. Actually, retail are some of the last people to actually be convinced to sell if they are holding something. And then most of the time, if you are seeing downward pressure, it's at these lows that retail actually sells. And when the market maker sees that, they send the stock market higher. Okay, so you really have to be paying attention to these moments, just like over here. But you notice how the options market would be hurt a lot more from that. So not only would people holding the stock be hurt, but over time, these retail traders would lose money at the low, be convinced that it's going to go higher, and then it drops again. And then they're convinced, okay, this is definitely when it goes lower, and then it bounces even bigger. So that is why a bear market can really hurt you. It not only hurts retail on the holding side of things, because by the end of the bear market, you're going to end up at lower levels, but it also hurts option retail traders as well, because you're seeing these rip arounds that lead to bigger rallies and things like that. So really believe a bear market is coming, but the main thing is pay attention to these signals. And as we go over to the Qs, they're actually seeing, I think they have more weakness because you have this flow of 3 touches to these highs here, very flat. And so if you're going with the scenario of, hey, this could curl over on the MACD and that would be pretty ugly, well, you wouldn't be wrong in thinking that. So to see this actually drop down like this could curl this over. And if that continued lower and going negative, well, then you're going to confirm some big signals here. You're going to confirm monthly divergence, which you see, which I showed you. CrowdStrike is very already. They just need like maybe 1.5 months to confirm that. The Qs might need 1 to 3 months to really confirm that from where we're at right now. But if this did confirm, that would mean some extreme weakness. So this would more so be your signal for, hey, something very dramatic is happening here. And if we pay attention to the weekly, that was scenario kind of option 1, right? Some kind of crash. Scenario 2, really option 2, is we're going to see another rigged move higher, and that's just because we are far away from this center line. So you know we are in a positive trend. We're starting to get tight in this area, even on the MACD. We're getting tight in the price action. We just saw a big move that completely absorbed almost, 1, 2, 3, 4 weeks worth of price action in one bar here. So that is something to pay attention to if this confirms. Now, the rigged move would be we get down towards that center line, right? We base out at any time, and then we're able to curl up one more time. So that's what I'd really be paying attention to if I was a trader. If this signal does not happen, then you might turn over that monthly and be seeing something crazy. So just be aware of that, especially going into next week. All right, now we do have earnings and things like that we have to pay attention to, but so on, and we'll get to that over the, throughout the week when we're live. As we look forward, though, we look at Apple, and if you're wondering, like, hey, why is the SPY holding up? There's so many stocks hitting lower levels. Well, it's stocks like Apple. Stocks like Apple are keeping the market higher. We've seen those reversal signals by positive territory, and we've seen positive moves. Now, the reason that Apple's going to be a little bit tricky and why I think it's rigged to the upside is because it looks completely different. We know it has a huge weight in the stock market. So if they were going to use a stock, and I mentioned this over last week, was if they're going to use a stock to keep the market higher, it's going to be a stock like Apple, Microsoft, maybe Nvidia. Okay, so as we look at the monthly scale here, you can see we crossed up positive territory and hey, positive move coming for the next month, but we're starting to wick out. So we'll look if this is able to cross over at any time. This would be, as far as it goes, you would have divergence here still. We had divergence the first time. Hey, it played out a little bit. We got some downward price action, but we did not go negative. So we were able to turn back up and go positive, and boom, positive move. So great little setup here for a moment. But is this a good 12-month hold? Most likely it's not. Most likely we experience weakness on that weekly scale for the SPY and the Qs. It's good to, even if you're trading one stock, to look how the actual market is. Like look at the signals on the SPY, look at the signals on the Q if you're trading Qs, if you're trading a tech stock. Because if that has some weakness in it, that means the stock that you're trading actually could have weakness in it, and it's just being manipulated higher to hold the stock market at levels that are pretty much fake at this point. So at this point, we want to pay attention to this. If that crosses over, we might be in a lot of trouble here. Okay, I'm just going to point that out because if we did it right now, you actually would have triple divergence on the MACD, not necessarily on the RSI at the same time. So Apple can experience weakness, but I think Apple's a great example of how they really rig the market to go higher using one big stock. Now, as we go over to Tesla, Tesla's a little bit of a different story. I'm interested to see what happens here because you are taking back that 200 on the weekly and you're starting to head up a little bit, breaking out, maybe getting a retest, we'll see, but it is behaving like the overall market, right? We're still seeing a solid selling come in this week. So I would pay attention to that. If that MACD rolls over, well, you're negative, so Tesla can experience more weakness. But if there is a short seller problem still in Tesla, I know that when it first came out and things like that, we did have a short seller problem. We had the government and other people, short sellers, market makers trying to force the stock down, but they couldn't do it because of all the buying in it. People really like Elon, people like Tesla. So the difference here with Tesla is it's actually seeing a monthly that could curl up into positive territory, but I want you to notice how it is behaving like the market. And I know that AMC and GME dropped off a little. We'll talk about those, but those have already curled up on the monthly scale. If Tesla was to do a retest and confirm in the next month, it might be telling you, hey, I might have a short seller problem and we might have to head up from here. So DJT saying that as well. And actually, let's pop over that. I think it's important to talk about this because we just had a president go through something that was just absolutely horrible. And I wanted to talk to you guys about it for a moment on the daily scale. So when we look at the daily scale, we got this signal, okay? We got this small signal. I believe this was last Friday. Yes, it was last Friday. And I wanted to talk about this for a moment, even though it might get me in trouble. There are certain companies that have always shorted stocks at very key times in history. So in the recent history, actually. So this would tell me, you know, if you believe anything about what happened last week and you do not think that it was a failure of intelligence and maybe a purposeful failure of intelligence, I'm going to just tell you something right here and you can come to your own conclusion. On September 10th of 2001, the day before September 11th, a few certain companies perfectly shorted the stock market before a terrible event happened and they made a bunch of money. Okay? With a crash, though, the other direction. Okay, let's be clear about that. And then on October 6th, which we all know October 7th, 2023, there was a dramatic thing that happened in Israel. We actually saw on October 6th, those same companies shorted the Israeli stock exchange. And the stock exchange fell, and they made a bunch of money. Then, on this week, right in these areas here, we saw some major moves applied by those same companies saying we are shorting the crap out of DJT. So remember when I say everything relates to the stock market, this tells me that someone knew that something was going to happen to the stock of DJT by Monday because of how confident the position was taken. The only problem is the stock went up because the bullet missed. And I just want you to derive what I want you to think about what I'm saying and more so come to your own conclusion. But the stock market can tell you a lot about what's going on around the world. And the fact that there were some big short positions taken on Friday might convince you that someone knew that something was going to happen And that someone was probably a big player in the world. And so I would really pay attention to that info as far as it goes when protecting your family and all that good stuff. I think that's really important to say here and to acknowledge that someone did know before it happened that it was going to happen, and that can tell you a lot about whether or not you believe it was staged, whether or not you believe it was an inside job. And I want you to come to your own conclusion with that. But great move here. Congratulations to whoever was able to catch this little play right here, because that's a solid move, and then you don't want to get greedy or anything like that. It's always good to take profit and leave some runners, but I just wanted to mention that real quickly. Now, as we go over to Amazon, this one on the weekly scale is going to be a little bit different. Amazon looks like it has some weakness here, and I'm just being genuine about that. Looks like we have some weakness in this area. A good place to probably put a little line on your chart for now for some kind of bounce would be down towards this level right here, 174.51. Because around that area, if we do experience weakness, even in the coming week, and we get some kind of bounce, that could be the signs of a bear market-like behavior where you make some divergences down here. Everyone's convinced that Amazon's going to crash. We actually bounce up to higher levels. Everyone thinks it's going to rebuild, and then we crash down to lower levels again. So at this moment, you do have the divergence between the highs. Divergence pretty steep here, so some weakness can come, but we'll see if it ends up being in a bear market or flash crash, right? But the two options from here really are, do we start to see that bear market and crash down, or do we build back over time and buy us some time going into the election? We'll see going forward, but this has confirmed it is weaker than some of the other signals. So let's look at this on the monthly chart, and you're probably looking at this and going, ooh, okay, that's a little bit closer to negative territory than the others, and you do have that pretty dang good divergence up here, and you have that on the RSI at the same time. So all of this is leading me to believe that when this does cross over, we're going to probably experience one of the biggest crashes in our history, and I want you to be aware of that. And if it's not going to happen, right, we need to know, because we know this market is rigged. You can see rigged moves on a 5-minute, you can see it on a monthly chart. Right now, you're pretty much seeing a rigged move on a monthly chart, just so you're aware. You're making a divergence. You've seen a time where money has been pumped into the system, so everything's held up by debt. So this is a big time to pay attention. We see weakness signals in here, and I'm guaranteeing you the same weakness signals were right over here before this happened, and you're about to see one more of those moments. But notice that this might be the rigged move to hold the stock market higher. Now you've created the divergence where you might not be able to turn back up from that area. You might get some kind of bounce from that area and then see that thing go back down if we go further into a negative trend. So really want to be paying attention to Amazon. I think it does have some overall weakness, which tells you maybe the buying power of the consumer might be bad soon. Maybe the sales for Amazon are about to go way down or something along those lines. We'll find out. All right. But I just want you to be aware of the signals that are forming for Amazon. It looks a little weaker. Now, we were talking about stocks that actually hold the market up. Well, what stock is worth as much as, if not more than Microsoft and companies like that, Apple? And what do we want to pay attention to? Well, this looks like one of the stocks that's able to hold up the stock market. So the stock market is really only held up by just a few stocks at this point. And that's why you really have to pay attention to this, because look at that monthly bar, really getting 2 wicks back to back. So some weakness above us. Look at the monthly chart. It is way up here. So one thing we have to say about if this is going to continue for a few years here, we could see that monthly base out at any time and even turn back up. And we could see that problem get bigger and bigger going up towards maybe even 2030. So let's really pay attention to what's going on here. Pay attention to those signals, but that is looking a lot like Cisco back in the day. So actually it's a bigger problem than Cisco, just so you're aware. It's like double the problem of Cisco. So this can flash down. We'll see. I think it will be more of a bear market to take as much money away from retail as possible. And we'll see what happens with that going forward. If we look at the weekly scale here, the only thing I wanted to show was this could be a weekly pullback. So for Nvidia is one of the stocks that has me leaning a little bit more towards that second option of we could see another rigged move higher in the stock market before we actually see some kind of full-fledged crash. And that's just because we have no divergence on the MACD, but we do have it on the RSI, which just tells me this MACD is really up high and we don't have the reversal signals on both momentum indicators. So a lot of the time when that does happen, when that is the case, you do see a pull back and then you're able to curl up later on, right? Where we pull back and we curl back up later on, that can then lead to a very clear divergence on both, and you might get a triple divergence here on the RSI for Nvidia. So I am aware of that, but I look at the overall stock market, and then I can say, okay, if we start to turn over on those monthly charts, then Nvidia might not be able to turn back up into positive territory. Maybe it drops too low and we just get some kind of bounce near negative territory, and you want to pay attention to both. So those are the scenarios really for Nvidia here. If we're going to head higher, you most likely only want to experience a few weeks of weakness here into an upturn, and we'll pay attention to those signals for you. We're live every single day. As far as it goes for AMD, look at that bar. That is rejection bar to the max on the weekly scale. And so that is a very, very bad sign. I just want to be very honest about that. That is something that is rejecting really close to the center line. You're curling back down on the RSI down there. You see it crossing that center line. Sorry about that. And then the price action, you're losing all these near term, these moving averages that are a little bit, shorter time framed. Now you're going into that 50. You're still above the 200. So if this does turn up at any time, that would more so be the second scenario if we see another rigged move higher. But at this point, that is a massive rejection that is most likely going to hold as a lower high. And this could be some kind of ABC move before you're actually able to see an uptick in AMD again. Obviously, the shorter time frames are going to look a little different, so make sure you're subscribed so that you can come back for Sunday's video where we go into those shorter time frames, and we'll give those weekly ranges out on Patreon. And just a quick note, as of right now, thank you for watching this far. As far as it goes, we have a lot more to get into. I just wanted to notify you that both of my courses, I'm leaving them on a sale. Volatility's higher, so it would be hypocritical of me to not leave the more volatile course, right? The little bit more advanced course, but everything you need to know to trade in any kind of market. And that includes, especially when volatility is high, I give you a strategy for when volatility is high, an option strategy, and it's only $100 this week. And I highly encourage you to take it because volatility is getting higher. And this is a great course that can teach you how to trade in that kind of market. If you're someone who's a beginner, you can start out with swing trading. That will be in the description as well. It's only $50. That's right. We're doing a 90% off of both courses because of how the stock market is really behaving here. And we're going to add a little bit to that swing trading course. But looking at this going forward, what can we pay attention to? Well, let's look at that monthly chart. And as you look at the monthly chart, what are you noticing? Well, extreme weakness taking you down to lower levels. You have divergence across the way. On the RSI, you actually have triple divergence across the way. This little divergence right here, look at this little divergence. This little divergence led to this. So what do you think of this huge divergence across the way? And it's on the MACD at the same time, right? At the same time. So both of these being at the same time means this could be even weaker than before. It really can. Now we'll pay attention if that monthly's turning back up, right? Because that is a sign to possibly invest. We talk about that in the swing trading course. But for now, we just want to pay attention to this little divergence without it at the same time led to that. So what do you think this will lead to? Probably something a little bit worse. And so you need to pay attention to it when looking at AMD. Meta, you're wondering another stock that's really holding the market higher. It's Meta, and look at this thing back in 2021 during that bear market. Look how much Meta really suffered, and then boom, curls up on a MACD and it just goes. So Meta is overall holding sorry about that, overall holding up the market at this point. And we notice that what is in the near price action for the monthly scale, we see this little divergence. So that immediately, when you see something like this, if you see this type of thing on your chart, just a little downward move that has this turn down of the RSI a little bit lower, you immediately want to pull up a weekly chart, because you don't necessarily have like solid, you have flat divergence across the way on the RSI, not on the MACD. So you know this is one of the stocks, one of the probably like 5 stocks that's holding the market up at this point. And when you see something like this on your RSI, you can easily go into a weekly chart and go, okay, there's going to be some kind of divergence here. What do we get? An extreme weakness divergence, really, because you're rejecting. So just like AMD not able to confirm the move higher, well, Meta was not able to confirm the move higher after making a higher move, and that is a sign of extreme weakness. You see how significant that divergence is. Now, the shorter time frames, yeah, we can make another move higher. Obviously, the shorter time frames are always different, but this signal right here, if this isn't able to curl back up, this positivity is most likely done, and you're going to see Meta see something bad. Now, this does take time to break down. I still believe we have the potential for a bear market at this point. But one of the stocks that is really holding up the market at this point by itself, you know, itself and a couple others, is showing you some extreme weakness right here. So be careful with Meta. You could experience something bad right now. Make sure to stick around just a little bit longer as we get to volatility, because that's going to be the big topic here. AMC, looking at that from a weekly scale, obviously we see this curling up towards the center line. If that curls down, it would be a bad sign. We're going to give you the new level to get that gamma squeeze this week going forward, because it's going to change from $6. You're up towards these levels, and look at that, we close at 501. It always seems to close around that $5, doesn't it? Interesting. But 501, that's a little bit above $5. So is that enough to cause some margin calls? We'll see. But the main thing to talk about on the bigger time frames is all the stocks they're telling you to invest in. They're saying, hey, these things are great, this is the best, you want to buy this. Well, all of those are way up here in the buy high, sell low category. And weirdly enough, AMC is in the buy low and sell high category, which means this thing might be a solid investment. According to the MACD, you're getting some kind of bounce here. If that can go positive, you can see a solid move. The shorter time frames are going to be so important for this, guys. Make sure to come back and subscribe for Sunday so you can get those shorter time frames. But I just wanted to overall show you how this thing is curling up. It's a little far away from the center line, so this could just be a pop that then drops. We'll find out eventually. But for now, the shorter time frames are important. We saw the fight up towards that $6 mark, so very interesting behavior there. And one thing to note on these bigger time frames, the daily scale. So if I just pull up the daily scale real quick on this MACD, it is turned down, okay? So you have to pay attention to that. That means the momentum on the daily scale is saying pullback as of right now, and you are closer to negative territory. So if we're not going to see AMC and GME pop off this week, well, that's because we are in pullback mode on the daily. That could just cross up at any time. We'll pay attention to it for you. As far as GME goes, you have not crossed over, but look how close it is to negative territory, going down towards our 2456. And look at that. It just so happens to, you know, this thing's about to explode, about to get past the gamma level right here, and the fight comes. That's what we were saying live. Either we break through and we see something crazy, or you see a major fight here. And we saw the major fight. We curled down on some shorter time frames, and we told you that means we're going down from here until we turn back up, and we could head all the way down towards 2456. And notice that we close below $25. I think $25 is a key level for the short sellers. We're closing below all the moving averages, so don't think that weakness can't come here. Your MACD might just confirm that on Monday. We'll pay attention. But as you look at this, you know, this is a macro video. We got the Japanese mayo up there, but I just wanted you to see how this is looking like the opposite of what they're telling you to buy. It's saying, hey, we're ticking up on a monthly scale, which usually means for your MACD telling you, hey, this might be a good investment. We're above the center line on the RSI. We're crossed up on this MACD. We're above the 9-month moving average. We're above the 20-month EMA as well. And we're just getting rejection from that 50. You start to turn up from here. That is going positive. Okay. Going positive is a big deal, because positive territory is where you really see positive price action. If you go back in the past, you'll notice the month where we were going positive was the month before right here. You notice we go positive this month, the next month, boom, you are in that positive territory and you see a big move. So you really want this to go positive overall. Now this can take a lot of time, so I want you to be aware of that. Now it's time to really talk about volatility. Volatility has turned up on the monthly scale, okay? The last time that we turned up, we saw volatility for a long time. The last time we turned up, we saw volatility for a long time. The last time we turned up over here from negative territory, we saw a major spike in volatility back in 2018. So these spikes in volatility come when you get these monthly turn ups. So this is why you have to be aware of a crash happening right in front of you, maybe in the form of a bear market. And then you want to be aware of those rigged moves higher just in case. But this is the overall signal on the monthly curling up, and the weekly did confirm this. We've been talking about this for about 5 weeks now. We've been talking about this. It does take time to come, but here we go. Triple divergence has confirmed. We are seeing the major breakout. We're getting above the moving averages. We're just below the 200 on the weekly. So this is curling up, and we do have an 85% chance for that update in the SPY on Monday. So we could experience some kind of bounce. So it's important to come back for Sunday for the shorter time frames, but a lot of the time, if you're going to see these big flash crashes or something like that, so if we're not going to get a bear market, then well, if we're not going to get a bear market and we're not going to get and we are going to get maybe even a rigged move, okay, then you most likely will see this thing just take off if you're not going to see that rigged move. But if you do see the rigged move or a bear market, you could get a retest that then pops off later on. So we'll pay attention to this on the shorter time frame. You do have 30-minute divergence up here that says Monday you could experience that bounce, and which kind of convinces me, if we do bounce on Monday, that one, I need to pay attention to a rigged move, and two, now I need to pay attention to bear market style behavior, which can really be, you can learn that in the course down in the description, which teaches you. It's $100 right now. It's the $100 course right now over the weekend, and you can get that and really know how to trade those type of signals. So on the daily scale, we want to pay attention to this curling over at any time. Look at the weird behavior again. Notice all the things going on around the world. Notice every single day we seem to see something like this. I mean, I've seen clips of GME when it's down at $24 and someone was like filming his Robinhood and it kept spiking up to 27 randomly. It just kept doing this, but the price is closing at $24 or something, $24.50. So that is just telling me some behaviors in the market are convincing me that we are still in the rigged game. We could see another rigged move higher. We could see a bear market. And I think those are the two real scenarios to pay attention to going into next week, especially if we bounce on Monday. So I hope overall that this video was helpful for you. That's the overall goal for this channel, is to help you get your brain thinking, get you to learn about this type of stuff and how you should see charts throughout your day. If you ever have questions, you can come to my live videos and ask me questions about that. I just think that the most important thing for the weekend is have fun with your family and then come into Monday prepared for some kind of bear market or some kind of rigged move that could take you higher. But you also have to be prepared in case we just crash, because a lot of the biggest moves in volatility, I know we have that 85% chance for an up day on Monday, but a lot of the times volatility, if it's really going to experience some craziness, is just not going to look back. The biggest crashes in history, volatility never looked back and it just kept going. So we'll pay attention to it. I'm going to tell you very clearly what I'm leaning towards. I'm leaning towards the bear market or another rigged move that leads into a bear market. Those are the two scenarios I'm most paying attention to, but I'm open to a crash. So thank you so much for watching to the end of the video. If you're going to dedicate some time to learning this weekend, I really respect you for it, but make sure you spend some time with family. I would really appreciate you guys, going back and doing something for yourself, especially this weekend when you see these type of signals, because it could mean we see some dramatic things next week. And so I think it's important to treat every weekend very gratefully, very like, I need to spend time with family. I need to do something for myself, eat some good food and those kinds of things. I think that mentality is a huge thing to keep high these days. All right. So thank you guys so much for watching. I hope you guys have a great weekend. Those courses are in the description, but I appreciate you guys being a part of this community and I look forward to making a video for you tomorrow. So make sure you're subscribed. All right. Peace.